in May to 66.68, and we're down 34 points in July to 67.82. Let's bring him in. Oliver Slope, Blue Line Futures. He's in Chicago. Thank you very much for coming on. I got 180 seconds for you to tell us all you know about the Ags here. What's top of mind to you, Oliver?
Well, I appreciate the bonus time today, Scott.
Yep.
Very nice. Choppy trade, I guess, is probably what it boils down here, especially over the last couple of sessions. If you look at today's price action, it's certainly encouraging relative to what we saw yesterday. But when you zoom out and kind of look at the charts, really just kind of in an inside day, especially for that corn market. So trading in the middle of yesterday's trading range, still within those highs and lows. I think we're going to maybe consolidate and trade within that range. It was a rather wide range yesterday. That's 472 on the upside, 456 on the downside. I think a breakout above or below, maybe that sparks a little bit more direction. But until that happens, I think we continue to see a choppy trade, which historically is what we see through the month of March into that prospective plantings report at the end of the month, which will be the big ticket item of the month. Then we can really start, I think, honing a little bit more in on some of the fundamental backdrops for these grain markets. But until then, it's a bit of a trader's paradise. You just got to find those ranges, those established ranges, and keep things relatively tight.
What do you think about this? Had you had a lot of money at risk this week, we had WASD, we had a CPI, a PPI. If there's nothing really going on, I think the market is really getting tired. I think, you could see maybe not a lot of movement. I mean, look what's going on in the equity markets. There's a lot of people that have got to be absolutely exhausted. What do you think?
Exhausted is definitely, especially being Friday, the end of the week. You're right. We had big numbers, economic data. It seems like the market has kind of been growing a little bit more immune to some of those headline numbers over the last couple of days. So I think we're setting into a little bit more of a norm. So I wouldn't be surprised to see that consolidation continue. I think our bright spot and optimism in the grain markets probably a little bit more heavy on that new crop November contract. We're kind of thinking that there may be a surprise to the upside there later in the year, even if it's just a flash in the pan. I think there could be some excitement eventually. And then outside of the grain markets, a lot of other markets on the move. Gold making new all-time highs today, and I think it traded within about $1.50 of that psychologically significant $3,000 level. Silver tried to play catch up a little bit today. If gold breaks out above 3,000 and can start defending that as support, I wouldn't be surprised to see silver make a move and try to play some catch up with that gold to silver ratio. So a lot of exciting things, not just in the credit markets, but all asset classes.
Yeah, I mean, you make a great point about gold. I mean, gold's on that move higher because we're bumping up right against that 3,000 level. The high is 29.98 in April. At least that's what my machine says. But it's interesting to see that a lot of folks running for it because they just don't know what's going on. I mean, they do know what gold is, and they can hold it, they can look at it, they can wear it. But that's to me, that tells me that there's some nerves out there. We'll see if they get frayed enough by tomorrow that we slow down. Who knows? Stay right there, though. We're going to go away. We're going to pay some bills. We're going to go back and talk more with Oliver Slope, Blue Line Futures, right after this. 96.82. Let's bring back in Mr. Oliver Slope, Blue Line Futures, Chicago, Illinois. Anything you got to say about the livestock there?
I will say cattle over the last 2 weeks has been nothing short of remarkable. I mean, the fact that we saw a counter-seasonal rally with funds near record net long in the face of a 10% equity sell-off is quite amazing. A little bit of a hiccup here within the last half hour in those cattle prices. Mm-hmm. We were hearing was a cash trade in Kansas at 201, which I think was a little bit of a disappointment. So you saw that pullback. I still think that cattle market, the fact that it was able to rally in the face of all those headwinds, I think is encouraging. But there's still a tremendous amount of downside risk in this environment when things are just flying around on unpredictable headlines. So if you're needing some downside protection, I certainly think this is an opportune spot to look at that.
I mean, when you answer the phone, I mean, are you a counselor or broker?
Both. I am a psychiatrist and a broker, and then right. we manage a couple CTA strategies as well. So we got a couple different hats on. Yeah.
So I bet there's been a ton of questions about what your thoughts are and where I mean, nobody really knows where the market's going to go, but you can have some good ideas. But yeah, I bet it's rolling the dice when that phone rings about what's going to be on the other end of it.
Yeah, absolutely. You know, the strength that we've seen in the cattle market over the last 2 weeks, like I said, is nothing short of incredible.
Oh, yeah.
And I think that really underlines the strength that we've seen in this market, which makes me kind of wonder if we're going to go retest those contract highs for the live cattle markets, which are still $3-4 higher from here. But again, even if we do go retest those highs, there's still a lot of downside risk from these levels. So I like using the options market to set that floor and keep the up.
Absolutely. Those guys, they have to be covered. You're right, because it's not an elevator on the way down. It's a trap door on the way down over there, right?
Right.
I appreciate you coming on. Thank you very much, Oliver. Have a great afternoon. Oliver Slope, Blue Line Futures. He's in Chicago. Bring it back to here too. Now